All right, the market up 40. Let's welcome in our market master of the day, Andrew Holland, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, great to have you with us here. Thank you very much for your time.
Thank you.
This is absolutely a very strong market, Andrew. So the only question is, how does one how does one take incremental positions, sort of apart from your investments already? What are those? There are no real big bargains. One can make that point. It's a general comment, but I think that would generally hold true. Incrementally, what does one do?
So I think it's a good question, and it's a dilemma for a lot of investors locally as well. In terms of they can lock in 7.5%, a little bit more in some of the instruments in the debt markets, and feel comfortable there. So money is switching there. So whilst you've got incremental, I'm outside of SIPs now, but money that you have, you're saying, should I put more to equities? There's risk there, so you're looking for any kind of risk-adjusted type of funds. Which will help you, navigate some of the still headwinds that are out there. But to be honest, if you want to be safe, then a lot of investors are jumping into the bond markets to lock in some of those yields.
Okay. Well, the IT index, the Nifty IT index, is dragging now, so not looking that great. By the way, Amara Raja Batteries is the stock of the moment, but it has Exide for company because these battery manufacturers. Now, the expectation, of course, is that after Amara's strong numbers, Exide will follow suit. Andrew, good morning. There's a theme that's playing out here, right? It's not just autos, but it's auto ancillaries, it's electric vehicles, the lithium battery manufacturers, all doing exceptionally well now. Under that whole umbrella theme, which is the space that there is still perhaps both value as well as growth headroom?
So I think in terms of growth, the autos and auto ancillaries, and particularly the electric vehicles, it's going to be it's not just a 1 year kind of thinking. It's a 2, 3, 5 years. So I think this is going to be a great space. And the way I think you can play it to little less, betting on who's going to be the winner. Say for electric vehicles in either two-wheelers or or passenger cars, it would be the auto parts suppliers, because they're going to have to be supplying. So you can say that XYZ might be the winner, but I would say that auto parts is probably the way I would play into this whole space at the moment, and there's still reasonable valuations there as well. I think the other thing on autos is obviously spending power is still there. People have still got money to spend, but I think as interest rates rise, we might start to see a slowdown in some of the order backlogs, shall we say, being filled. Going forward. So not a sector which I think you should be out of, but I think I probably play it more to the auto parts side.
Hi, Andrew. Good morning. Andrew, what about the IT space? Quite a bit of the street is skittish on it, but the IT stocks actually have surprised in the last 40, 50 days or so. Do you continue to remain cautious on this space? If someone has it, do you think they should get out and get in maybe when we see a sharper correction, or are you changing that view on it?
No, we haven't changed our view. We're still very cautious on the IT sector. The correlation with NASDAQ is still very high. So, the more recent kind of rise that you saw in global markets, including the tech stocks, helped our companies as well. But you just can't walk away from the negativity that you're seeing in the tech stocks. And we saw it, again yesterday with Apple saying they're going to start to freeze hiring, Amazon going to reduce people. So the negativity there is going to continue to hit our sector. And I think interest rates rising in the US, did the Federal Reserve, Jerome Powell, did he pivot or not? I think he did, and I think we're just now guessing whether it's going to be 5%, which I think is probably right for the Fed funds rate. So all of that's known. But what I don't think is known is, having seen, from virtually 0 to say 5% by early next year in the Fed funds rate, is that pain to the consumer and to businesses in terms of higher borrowing costs, higher interest costs, and so forth, is yet to be kind of fully felt. You've seen it in the UK. I mean, the Bank of England very interestingly yesterday said we think the market's getting ahead of itself in terms of the expectation for interest rate hikes, which obviously hurt the currency. But we can't walk away from the fact that all of them are still hawkish on trying to get inflation down. So the pain is there. And for India, whilst I'm less worried and I haven't been worried throughout the year, but if the global recession does start to hit, that could hit our export to some extent, and that doesn't help us in terms of current account balance of payments, and that might be reflected in the currency at some point. So just something to watch out for as a headwind, as we're saying that India's decoupling from what's happening globally.
Absolutely. I mean, well worth highlighting risks as well from time to time. The market, by the way, the Nifty is absolutely flat. It actually slipped into the red from that 40 points, disappeared. We slipped into the red, now back slightly 1-2 points. Flat but higher in the green once again. The themes that we highlighted continue. The railway infrastructure stocks and the PSU banks like Bank of India. There is the odd defense name, Cochin Shipyard. Siaram Silk is up 17% now. It started 9-10% higher. That has continued to make its move today as well. Andrew, names like, themes like defense, themes like railway infrastructure, which is largely made up of PSU stocks, right? Or even PSU banks for that matter. These are historically, on a consistent basis, they've not made money. But they are now, right? And a lot of times, a lot of big money is made when you buy when there is a lot of disbelief and and there is something changes. In defense, for example, one can argue that something has changed. Indigenization and focusing on making here is gaining prominence. I mean, we've seen that announcement after announcement. How do you approach some of these themes, and do you like them already? What's your sense?
No, so Prashant, if you remember, throughout most of this year, we've been saying that there's going to be a big capex cycle globally, and it would fall into two parts. One would be obviously defense spending because of what's happened in Ukraine and with Russia, and the second would be renewables. So that, just take that as a given. That is not going to go away. That's going to continue for the next at least 2 to 3 years in terms of heavy capex. The second capex cycle, or the second part of the capex cycle, is those industries and where there's a supply constraint or supply concern or security concern, and that's going to drive countries and companies to try and fill that gap. So for India, for example, semiconductors would be one. So as you see more and more companies come into India to address that problem of say, security supply, it's going to be those smart factories, smart offices. It's going to be the ABBs, the Siemens of this world, which will benefit. So yes, you'll have your normal capex cycle of roads and bridges, but this time I think it's going to be slightly geared towards those types of companies because of the difference in the capex cycle. The final thing I'll say on themes, and it's something I've been highlighting just more recently actually, is that with the problems with China, I think the electronics industry in India will have a boom time over the next 2 to 3 years.
Okay. Well, the space that's really picking up now is PSU banks. After the positive commentary from UCO Bank, that stock is up almost 2% odd. You have plenty of them. There's IOB, Bank of India. I mean, this is a theme that has played out for the last 6 months, and you do have both Bank of Baroda and SBI coming out with numbers tomorrow. Andrew, I do understand that this is a space that has, at best, given you good trading returns. It's not made investors much money over the last decade or so. Do you think this time could be different? Because we had some very positive commentary from UCO Bank saying that, the corporate slippages have gone down. There is no large corporate account under stress. How do you feel about this space?
No, I mean, obviously, the whole banking sector is saying this. I mean, Uday Kotak said we're in the Goldilocks moment. So, that applies to all banks. But I've always been of the view, because of maybe kind of governance issues on PSU banks. They are cheap, don't get me wrong, but I'd rather rent them than own them. which goes back to those trading times where you can make some very good money, but you don't necessarily want to own them for the long term because they really don't have. I'm talking about the smaller PSUs rather than the larger ones, where you would find that they just don't have the capability to gear up as the economy continues to grow. They'll do well, don't get me wrong, but I think the valuations was really the point of where you buy and trade it rather than own it.
Okay. We'll have to leave it at that, but just one comment before we let you go, because we're tossing to, the next segment where we're talking about consumption, a lot of these food companies. So Sapphire Foods is the one on our list. We've also seen some really good numbers coming from the likes of Devyani International. Is this a space that you like?
So interestingly, I was, in our morning meeting this morning, I was saying that one of the trends globally I think will happen is that as people trend down from maybe going out to restaurants and so forth because of the disposable income becoming lower, the fast food restaurants and will be the ones which will really start to pick up again. So I think I'm not saying that's a trend that will come in India very quickly, but it's something that I think we should keep a very close watch on because it'll have good sentiment for the whole of the sector.
All right.
All right. Okay, Andrew, thanks a lot for joining in and giving us your thoughts on the market as well as the consumption space, which